Hi everybody, Dion Lyle with Fitzgerald25. Wearing my mask. Don't need that here, I'm alone. But please wear your mask when you're out in public. So, B2B payments, second in the series, and I'm going to talk about the issues. What's interesting about the issues in B2B payments, I've been in and out of B2B payments for probably 25 years. I started my career as a controller, not a career track I enjoyed, but had to be done. I learned a lot about AP, AR, finance, and the controller duties. But what's interesting about it is all these years later, as I'm in fintech and I've worked on B2B projects during the last probably 10, 12 years, I haven't seen a lot of progress. So what are the issues? What's the break in the chain, so to speak? Well, it's not real time, manual processes, no analytics, and often even no data to analyze, error-prone entry, batch process, lack of remittance data, which is a fancy way of saying I need to match up these data points to prove that the payment's valid. Because there is fraud in B2B. Now here is a, sorry, way too small diagram from Bottom Line Technologies, and they kind of show the business complexity. And if you saw the last rendition of FinTech 5, you'll see that I showed a different SAP Ariba version, still the same issue. So I came up with a model, not to solve for it, but just to show the complexity. So you've got corporate finance and treasury. They manage a complex set of tools, data, solutions, data flows, it's really complex, as you can see here. You have invoice to cash, you have procure to pay. Procure to pay includes e-procurement AP, invoice to cash is AR and the invoicing. You've got the cross-border plus domestic for B2B payments. You've got faster payments coming up now, already in the UK. P-card, purchase card, SIP, BIP, seller instituted, buyer instituted. And you've got fleet card, ACH, wire, check, bank transfer, and then you have to integrate all this data into the bank. You got to get all the data, you got to put it into your treasury so you can manage working capital. This is the model that I came up with based on years of being in this space. So let's look specifically at AP, or accounts payable segment of B2B, right? What's the issue? Goldman Sachs did a really good report here. Again, sorry the graphic's so small. You can see it online in the Medium paper. But basically, there's so many hands in the cookie jar when you process. So Wells Fargo recently said they have one KPI about this. The only metric is how many touches from invoice to approval, and just get that number down, right? Get the number of human touches on invoice to go down. That's a great KPI because that's where all the expense is. Cost of processing invoices can come down by 60% for SMBs and 50% for enterprises just by automating. Now, it's not an easy process to automate, right? Because you have to be sure not to open up any fraud openings as you automate. For larger companies, it could be $9 to process. Can you imagine that? $9 just to process an invoice. Now, if your invoices are $100,000, that's great, but what if they're $200, $300? As a percentage, that's just way too much. Now, firms have used ERP, Oracle, PeopleSoft back in the day, and et cetera, but it hasn't really solved the problem. It just automated a mediocre system. Right? Ardent Partners, by the way, if you're in this space, in procure to pay, invoicing, procurement even, they do a fantastic job covering the space. Cost to process a single invoice they have is $10. Time, 8.3 days. Invoices submitted as paper, still 75%. Exception handling, 22.6%. I think if you heard my first FinTech 5 on B2B payments, you'll know that I had my own personal issue where an invoice, because I put my middle initial on the invoice and their PO didn't have my middle initial, F, they kicked it back for like a week until we could figure out what it was. That kind of mismatch, right? And then dynamic discounting, right? Only 16% of respondents, according to Ardent Partners, use dynamic discounting, which could be millions of dollars a year for a large company. Only 26% even have supply chain finance solutions, which help you optimize your working capital position. And dynamic discounting, it's free money. It's just taking a discount you're owed. Now, one other thing I want to point out here before I wrap up is the company size. SMB, SME, mid-market enterprise, Fortune 500. They all look at this a little different, right? Because when you get up in here, the really big companies, you can be talking millions of dollars a month in missed dynamic discounting or other opportunities to optimize working capital, because that's what Treasury does. Optimizes working capital, right? Now, it's worth noting that the number of SMB firms is disproportionate to the volume, right? And the graph shows, everyone knows that. Big companies are most of the volume. So why so little progress in AP or invoicing? Why are we still searching for digitization? Well, simply put, change is hard. And change in finance is very hard. And A16Z wrote a really good paper about this, about the CFO tech stack. Highly recommend you look this up. I use this graphic here, this pyramid in a later paper of mine. But what's interesting about this, the investment A16Z announced today is in a company called Runway Financial. Their whole thesis is, why haven't we built something better for data, analytics, insights in finance, right? And Runway Financial, haven't seen their product, but their website's fantastic. They really look to address this. I look forward to seeing them in the market very soon. I'd love to see more finance teams use this type of thing to see the data, see the trends, and just limit the paper, right? Well, I hope you've enjoyed this FinTech 5. I've got a couple more in the B2B series coming up, and I hope to get a lot of comments and any suggestions or any insights that you have. Happy to hear. Love to hear from everyone about B2B payments. It's a pretty exciting space right now in 2020.